Happy weekend, everybody. This is Bob from Trade Genius, 8th of July, and I'm going to blast through some charts. I'm not going to go through everything. I just want to point out some I think obvious opportunities to go long and to go short, and then you could be the judge if you agree with me or not. But I've taken some action on some of these already, and so I'm just going to blast through. If I flip through the charts and don't talk about it, it's just because I don't want to. Um, so anyway, so on GDX here, we've now this seems to be support for for the miners, and it's and a little bit of hammer here on a gap down. So it's probably worth a trade. And I took a trade. I bought some dust puts for July monthly expiration at 33. I'll get to those in a second. 'Cause I'm looking, I'm not looking for a new bull market in the miners. Some people are calling for some big moves coming up. I really don't care. If it gets up to the VWAP here, I'll make good money on my dust puts, and that's what I'm looking for. I'm looking for another attack back up to the VWAP line, and if I get a 5 to 10% move in GDX, I get a 20% move in dust, and I'm a happy guy. So the Qs here are now back at VWAP. It's interesting because they've been up, up, up forever. So now I'm looking to see if this is gonna break down, or if it's gonna break back up into another run. I just have a hard time seeing that the Qs are going to make another run with the Fed, quote unquote, getting tighter. We're taking liquidity out of the market, and earnings really suck, and the economy sucks. So I'm looking for this to break down, and I've been trading NQ on the futures, but waiting for this to see if it breaks down. Then I'll buy some puts on it, and I'll trade something else on the futures and just let it ride. But it's still choppy enough. But look at these moves. These are some nasty candles. Somebody's trying to get this thing down to VWAP, and we'll see. We'll see if this holds. But if we break back down below the VWAP here, then not good. Well, it's good if you're short. Okay, silver. So this band here, I use standard deviations of the VWAP. It just gives me a better feel for really overbought and oversold, because everybody likes to run back to the VWAP, and so this is 10% away. So that means this move here is not supported by a lot of volume, and I'm expecting a bounce back. Um, you know, Probably all the way to the VWAP, and there's a hammer. A lot of times hammers fail, so hammers aren't necessarily end all be all, but this is a good place to take a shot long for silver. If it fails, it fails, and then you just regroup. And but this is a pretty nasty dump on a pretty light volume. So I just think this is a game being played, forcing out weak longs so that stronger buyers can come in. And I just think this is worth a trade. Set a stop 10% below and see if you get rewarded. Same with GLD. Okay, and so I'm looking for a bounce in GLD as well. You see that in IAU, and the same with natural gas. I took a shot on this, and here, but I left my stop pretty tight, and that news report came in and just and took it off. We're pretty flat on the trade, but I'm looking for natural gas to get a bounce too, bounce into VWAP here. And I think starting, I don't know if it's this month, I have to look at my notes, or August, you get you'll start getting the move higher in natural gas seasonally as well. I think it's in July. – So interesting here. I haven't been trading it, but something to keep an eye on. Um, I think I think there might be a tradable bounce here in IYR. It's just pretty high price, so um, you might get a 2 or 3% move here opportunity. That's what it's been doing. It's really just been slowly trading in a range here, and might get another bounce here because I think the bonds are pretty over. I think the are pretty oversold right now, at least TLT, and I think you'll get a move on it. This is no play on the economy. It's simply a rate play. AG, okay, we got triple bottom here on AG again, driving it down into the range. It's probably worth a shot if you want to wait to see if it gets a move higher. I took a shot on it here as I tried to be consistent, but got stopped right out of it, and so be ready to look for another opportunity on this. When AG moves, you get a 10-15% run on these things, so it's definitely worth taking a shot. Oil, gap down hammer. I traded pretty much just on the futures mostly, and so I think this is an opportunity for oil to take a pop here, and I don't know on the macro side. I've been calling for $40 oil for a while, but you got to respect these counter trend moves. But oil's in trouble, so I'm looking for a bounce and to short the bounce again. And we just have way too much of it out there. Way too much of it out there. And if they keep raising interest rates, the cost to carry goes up, and these traders can't hold the oil off the market. So it'll just continue to flood us with supply. And Trump's on the record saying he thinks oil prices should go down even further. So usually what the presidents want when they do this jawboning, they get. So you remember Obama's famous 2009, I think, stocks are cheap. Well, it pays to listen to the president. No matter what you hear on the news, presidents are very powerful. And this president, views himself as an alpha dog. So he's going to push pretty hard for what he wants. Okay, the big position here. Again, we're at the bottom of the range. We've amassed a 6,000 share position here, and just been selling calls against it. And I'm looking for it to push back up the VWAP. I'll take a little bit off. Like I want to just hold 5,000 shares. So it was a purchase of a sold put. So let it move up. Hopefully, I can take profit on a buck on it, and let's see where this thing goes. My expectation is that at some point in the next 12 months, we'll be seeing wheat precious metals much higher. It hasn't done anything in 2 years. So if anything, it'll be a great trading stock, and that's what I'm going to do. If it pushes back up to here and gets stymied, then I'll sell half and let it come back down and rinse and repeat, just like I do with the grains. Here's dust, little inverted hammer here. So I bought puts on it when it was at 35.15, and for 2 weeks out, and we'll just see what it does here. Been pretty lucky on these dust puts. I think I've done 6 or 7 trades this year on them, and 2/3 of them have been wildly profitable, and the other third have been some minor losses. So you got to take it when it pushes up out of its band like this, overbought. I'm looking for a move down. Like I said, I'm looking if I can get 15-20% on this. I get the 33 puts strike. So if I get it down to 30, I'm a happy guy. I'm in it at $1.40, I think is my price. So we'll see what happens. MOS. This will start moving with the grains. Maybe not this year, but next year. This is lately been a reflection of the dollar over anything else. This used to be my favorite thing to trade, and it's just been relentlessly suppressed. And so, my last couple of forays in MOS has been either stop out, break even, or stop out for a loss. And, you talk about not being biased as a trader. Well, guess what? I keep going to the well on this one. So, follow me at your own risk on this one until I get my arms around it again. But I love ag chems long term. I think the ag markets are in trouble. I might have been a year early on the grains, but they're starting to really move now. And the only way that they're going to get crop out of the ground is they're just going to have to flood the fields with potash, and there'll be a recognition event, and then boom. XME, took a shot on this and got stopped out right away, but I'm looking for this thing to climb back up and at least get to a cup here, and then we'll see what happens. So I'm just watching it. When this curls back up again, I'm gonna take another shot at with XME. Okay, I think biotechs are overbought, way above their range. So I think it's an opportunity to take some puts on it. I didn't buy any yet. It's just been pretty favored, but I think this healthcare debacle that the Congress is going to do is not going to be favorable in the end to these companies, because people simply can't afford this stuff, and at some point there's going to be a come to Jesus moment on this. But when it gets overbought like that, there's an opportunity. But from a macro standpoint, I thought they would get punished hard in the last election. They totally blew right through it. Demographics are guess favoring them, but there's an opportunity here to take it short for at least a trade. Okay, the grains. So been long suffering. So took me 15 months to get it back to where I originally recommended at 2003 back in March of 2016, and just been relentlessly suppressed. And again, I think it's a dollar thing, but there was just a lot of crop out there, and I think that's getting eaten up. We're going into another La Nina year this year, and this year the fields are acting like they should be for that kind of event, and I think we're going to get some good support on this. And so what I've been doing, the easiest thing to do on this is, because it's still a little unstable for me, it's been in range, is that just been taking half off and then buying it back. But at some point here, probably right above here, if it gets back over 2075 area, then I'm going to stop doing that, because it'll finally break out of a rectangle that it's been in, and I'll look for another range move higher. But in the meantime, just if it pushes up, if it rolls over like it looks like it might be again, if it drops back below, I'll take half off, let it come back down to 19 area again, and then shoot back up and rinse and repeat. Dollar's way undervalued right here, and I think it's probably due for a pop, but keep an eye on it. Okay, wheat, component here of some of these ETFs. This is a recognition event, folks, okay, right here. But this one fooled me last year. We had the big move. I bought it ahead of it. Big move higher, thought secular going to happen, and then they took it right back down. But the best thing to do right now is I think I told my partner, 860 or something like that was probably strong resistance. Got the 845. You don't have to be a hero on this. It's going to come down. So if you haven't bought it, I would probably look here or look here to add a position. But if the dollar pops, they're going to push wheat down, and then you should be able to get back into it again. But this is because the wheat production is off big time. And if this thing stays up here, long term on wheat, then you can look at 966. You can look at 1226. You can look at 1750. I mean, there's opportunity here. I mean, you know, people are chasing after the fangs. You know, buy a couple thousand shares of wheat and just put it away. Okay, it can't get lower than this because they stopped putting it into the ground. So this is some great opportunities here, and so I'm looking for a bounce, and then, you know, for me, I'm thinking it's going to probably eventually get to here. All right, put a little cup in and then shoot. But we're going into definitely a grand solar minimum, and you have to respect the next 4 years. It's going to be very interesting on the ag front. You know, make sure you have some food put away. So sugar's starting to get a bounce too. That's what's supporting DBA. Been watching URA here. Starting at a little bit of a move, but still too early for me to take a trade on it. Corn pushed through too. Okay, a little inverted hammer here. So, you know, we might be getting a sell back on this down to here. But, you know, at this point, I think it's going to start establishing a new range or new trend. And it needs to break out of, you know, this area here, 20 area, to start a new rectangle. Okay, I shorted the semiconductors and got chopped out right away. You know, the Friday trade, they're just running stops, no volume at all. So it's just tough. It's been tough to take some of these swing positions with no volume because the market's just been flying up and down. Same in SILJ, looks ready for an opportunity. Soybeans pop too, and I watch soybeans because the Chinese are buying soybeans from us like it's going out of style. And I tweeted out, I just have a Twitter called Bob Loves Hawaii. Follow me, it's free, and I like to collect information on anything I can to help me become a more informed trader. And they've been showing some reports of definitely stress in the corn belts and the wheat belts of China, and the corn belt's probably a soya belt too, and they've just been buying soybeans from us like it's going out of style by the millions of tons. In fact, it's one of their top 3 imports from us, and other than like Brazil and South Africa, the crops aren't doing so hot, and our soybean belt in the Dakotas is getting absolutely crushed with drought. So just keep an eye on it. Again, these are some big moves, but sometimes people, you don't believe, you know, you think, oh, it's going to come back down. Then sometimes these moves just keep going. That's why you have to have a little bit in, you know, all the time. I think the biggest mistake I make sometimes is hopping out, thinking I got the move when I should just, if I believe in a secular move, do half in full position, half in kind of approach. And I adopted that after getting burned a few times on the ags. And I think it's one of those secular moves. It's way oversold, undervalued from long-term perspective. And I think it needs to be in your portfolio. Here's JJG. And now it's formed a cup here. So it's the time to watch it. I think this gap gets filled, and so if you want to buy it, I would probably stick a buy order here, and then I'd put a second buy order here. For me, we're recommending going back in full position at around $29, and you know, I think the days of this thing getting crushed are over. And if I'm wrong, you lose $1, okay, and then double down. But it's not getting any lower than this. This just represents farmers not being able to produce and just taking food out of production. So you have extremely low risk here in terms of downside versus upside. I mean, your upside is probably 50%. Your downside here is 10%. Good risk reward. Okay, the yen is pushed down again all the way to the thing. This is the thing they use to suppress gold, suppress oil, and lift the market. Little hammer here, definitely oversold, and so I'm looking for it to move back up. If you notice, it's just trending. I don't know how the Japanese people do it. They're getting no value out of these low commodity prices because they're the ones that are causing it by cheapening their currency. So these poor people are just at the whim of their central banks and their megacorps, and we thank them because I really appreciate the cheap oil. But I think we're going to get a move higher in the yen. That means higher in oil, higher in gold, lower in the markets. You know, get yourself comfortable with this. And this is starting to get overbought now. Will it get to here? I don't know. If it gets there, for sure, short the heck out of it. But just got to remember the sensitivity to higher rates in a debt-drenched economy is devastating. And I don't think they're going to be able to hold it. You know, this is why the financials are higher. What a joke. Once this thing rolls back over, the financials are dead. There's our friend Mr. VIX. Looks like it's trying to make a move higher, and just something to watch. But we took advantage of it last week, but this week I couldn't make any money off the vol crush. It just wasn't, the VIX pushed down, but the VXX didn't push down. So there's some nervousness now. We're not getting that steep contango to really drive down the VXX. So just kind of keeping an eye on it. And VVIX, and I think that's it. So I hope you enjoyed this, and I may do a futures video later this weekend. You know, I have one more change I'm going to make to the day trading money machine on some sensitivity around taking trades or not taking trades, and once that's done, then I think I'll do a full-on video on how it works. But it works really well. Just trying to make it easier for people to see the signals, and to make a lot of money, and I think be worth sharing it with everybody. We all need an edge, and I think everybody needs to get comfortable day trading, because if we start getting into 2007, 2008 scenario, and with these low volumes and with these algo traders, they're just going to keep picking off swing trades until you're frustrated or broke. And look, you know, make money with them. You know, go to cash every night, make enough to pay for your family, leave everything else in cash, and let the prices reset. Then you can take some long-term position again. That's just the way we may have to move. Either be really long-term or really super short-term. And I'll show that to you. I just want to get one more change into it, and then I'll show you how the arrows lay out. I've been posting trades on and off here for the last couple weeks, and I've had really 2 spectacular weeks, and this thing's ready for prime time, and I think you'll like it. Anyway, catch you guys later. Thanks, bye.